What if the blueprint for a major shift in digital finance is already visible, and XRP appears to be positioned as part of that ongoing transition? As market structures evolve, institutional participation expands, and regulatory discussions progress, XRP is gradually entering a phase that many analysts believe could influence how large financial entities interact with digital assets. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So be sure to stay focused, as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. Please remember, this is not a financial advice video. One of the most notable developments is the rise in XRP-related exchange-traded products. Recent reports indicate that XRP ETFs have approached nearly $1 billion in inflows. For a newly launched spot product, analysts consider this one of the faster accumulation phases observed in the crypto ETF sector. These inflows highlight increased interest from regulated asset managers and investment platforms, which now collectively hold an estimated portion of XRP's market capitalization through ETF structures. Alongside this trend, XRP has seen a multi-week streak of consistent institutional inflows. A recent weekly inflow reportedly crossed $289 million, the highest weekly number recorded for XRP so far. The last several weeks now represent nearly one-third of the total assets under management in these products, influenced significantly by U.S.-regulated ETF approvals and launches. Ripple's expansion into institutional financial services has also contributed to this increased attention. The company has acquired platforms to support treasury and liquidity management for large organizations, making its ecosystem more attractive to institutions that prefer regulated and compliance-oriented settlement tools. Statements from Ripple's leadership further highlight the moment. XRP was among the fastest U.S. spot crypto ETFs to reach $1 billion in assets under management, despite dozens of other launches in the same year. This suggests that traditional investors were seeking regulated ways to access digital assets, especially through retirement accounts and platforms that prioritize compliance. This added accessibility invites a different class of holders, individuals who may not deeply understand blockchain technology but recognize the benefit of professionally managed digital asset exposure. For such investors, stability, long-term development, and regulatory structure often matter more than short-term speculation. XRP's long-standing focus on utility aligns with this preference. On the regulatory front, significant discussions are underway. Major U.S. banking CEOs are scheduled to meet with senators regarding digital asset market structure legislation. This development signals that traditional financial institutions are moving from observation toward direct participation. Analysts view this as an indication that clearer regulatory guidelines may be approaching. While markets often follow a buy the rumor, sell the news pattern, current activity suggests a different environment. With institutional inflows continuing during a period of increasing regulatory discussion, some market observers believe that reactions could strengthen after confirmed developments. Years of uncertainty have created a buildup of interest, and institutions may be positioning themselves in advance. Macroeconomic factors have also influenced recent market conditions. Global tensions, rising bond yields, such as Japan's 20-year yield reaching a level not seen since the late 1990s, and earlier market stress created hesitation around risk assets. Despite these challenges, several financial institutions have maintained positive long-term outlooks for major digital assets. Bitcoin remains the most widely discussed asset, but due to its maturity, some analysts argue that institutional growth curves might be steeper for other assets still in earlier adoption phases. XRP is often mentioned in this context due to its increasing integration with regulated financial products. Another recurring point made by market watchers is that retail participants sometimes exit positions earlier than intended due to long consolidation phases or emotional fatigue. Institutional players, however, often adopt a longer-term approach and tend to focus more on supply dynamics than day-to-day movements. There has also been a shift in U.S. regulatory leadership, with earlier obstacles now reduced and several new appointments viewed as more supportive of digital asset innovation. The environment appears more open to regulated growth. This shift is important because the approval of ETFs and their continued inflows likely would not have occurred under more restrictive conditions. The combined effect of ETF participation, ongoing legislative discussion, and growing institutional infrastructure has led some analysts to suggest that market liquidity dynamics may change over time. As ETFs and institutions increase their holdings, less readily available supply may remain on public exchanges, which can influence market behavior depending on future demand conditions. With regulatory clarity moving forward, ETF access expanding, and institutional channels developing further, XRP's trajectory appears increasingly tied to structural adoption rather than speculative narratives. The next phase for XRP, according to many observers, will likely be shaped by capital flows, regulatory outcomes, and real-world utility. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching, and we will see you again in the next video. Goodbye.